has been a more than 80% increase in homeowners selling their properties within 2 years of purchase. And this is according to the latest research done by Lightstone Property. They say this might suggest many buyers took advantage of the lower interest rates as the market provided during the COVID pandemic, only to find they could not afford mortgage repayments as interest rates normalized. Now, for more on this, let's speak to Esteani Marx, the head of real estate at Lightstone Property. Esteani, thank you so much for joining us this morning. Can you just give us a quick definition of a distressed sale?
Morning. So I think if we look at a distressed sale, we are talking about a homeowner that obviously has a bond that has or taken a bond to purchase a property and are now sort of in a situation where they cannot service the bond. So, they are unable to repay, and the bank are putting pressure on that homeowner to make payment. So that will be what we confine or define as a distressed property or the distressed owner.
So when we take from your research an increase from 2% of sales in May 2022 to 3.7% of sales a year later this year, it's a quite concerning trend.
Definitely. And, I think it's very much linked to interest rate increases, the interest rate levels. So I think as these continue to rise, which we definitely hope doesn't happen, but it's probably inevitable at this moment in time because of the levels of CPI. But I think as that increases, we will definitely also see an increase in the homeowners that need to sell quicker. So if you look at the average time or period in time that a property owner actually holds on to their property, on average, it's about 13 years. So, it is concerning to see that level dropping, especially for new homeowners that are unable to service the bonds in a shorter period of time.
Esteani, as you just said, you see this trend with new homeowners, but do you also see it with older homeowners? Maybe someone who's owned their home for 10 years, but now suddenly, because of the high cost of living and the higher interest rates, they need to sell urgently.
Definitely. I think that is a trend that will be across board. So new owners and people that have had their properties for a longer period of time. And again, linked to disposable income. I mean, if everything else keeps on increasing, bonds certainly are also becoming a bit of a distress for homeowners. I think it's definitely across the board where we will see that phenomenon for quite some time, until such time as the interest rates might start dropping again, which economists are suggesting around about the second quarter of 2024.
Now let's get to that expectation. The lower interest rates gave many people an opportunity to become homeowners in 2020 and 2021. But now in 2023, our prime lending rate is at 11.75%. Could anyone have expected the continuous interest rate hikes since November 2021 over the past 2 years?
I would certainly argue yes, because, the levels of interest rate drops that we've seen in such a short period of time is obviously not sustainable. We would have expected that the interest rates would have increased at some point in time. So I think it was definitely expected, probably not expected that we would have 10 consecutive increases in interest rates hiking. So that probably wasn't something that the consumer have foreseen. But, I think as everything else, the minute that you take on some level of debt, you need to also make sure that you are aware of what's happening in the economy to some extent. And as you can see, CPI increased quite significantly over a period of time. And interest rates are linked to that quite significantly. So you need to sort of anticipate that level of increase, because you are subjected to that when you do have debt that you need to service at some level or at some point in time.
So the next MPC meeting from the South African Reserve Bank is on the 23rd of November, next week, Thursday. Do you think we could hope for another unchanged stance, as most economists are only expecting a drop from next year?
I think we certainly hope for an unchanged or an unchanged stance. But from what I can see, if we look at CPI is we aiming for 4.5%. In July, we actually achieved 4.7%, but unfortunately, it's actually now back at, I think, 5.4% as of September. So the indications are that there may be an increase of interest rates from about a 2.5 or 0.25 basis points. So, yeah, I think that's certainly not what we hope for, but the indications are there that we probably will see a little bit of an increase again in November.
Thank you so much for your insights. That was Esteani Marx, the head of real estate at Lightstone Property.